Imagine two people. Same age. Same job. Same income. Same city. One gets approved for an apartment. The other gets rejected. One gets a low-interest car loan. The other pays thousands more. One qualifies for the best financial opportunities. The other constantly gets told no. What was the difference? Not intelligence. Not hard work. Not talent. A number. A number most people never learned about in school. A number that quietly follows you through adulthood. A number that can affect where you live, what you pay, and how much financial freedom you have. That number is your credit score. And whether you realize it or not, it can influence some of the biggest decisions in your life. In today's video, we're breaking down what a credit score actually is, why it has so much power, and how you can improve it, even if you've made mistakes. Because once you understand credit, you stop feeling like the system is working against you, and start learning how to make it work for you. Let's start with the question most people are too embarrassed to ask. What exactly is a credit score? Part 1. What is a credit score really? Most people think a credit score is some complicated financial mystery. It's not. At its core, a credit score is simply a prediction. It's a number lenders use to estimate how likely you are to repay borrowed money. That's it. Think of it like a financial reputation score. Not a measure of your worth as a person. Not a measure of your intelligence. Not a measure of your character. Just a prediction based on your financial behavior. Imagine you're a teacher. You have two students. One submits assignments on time every week. The other misses deadlines regularly. If you had to predict who would submit the next assignment on time, you'd probably choose the first student. Credit scores work similarly. Financial institutions look at your history and ask, what is this person likely to do next? That's why your past behavior matters. The system is constantly looking for patterns. Have you paid bills on time? Have you managed debt responsibly? Have you borrowed too much? Have you missed payments? Those patterns create your score. And here's where many people get confused. Having no debt doesn't automatically mean you have great credit. In fact, having no credit history can sometimes make it harder to get approved. Because lenders have no information to evaluate. It's like trying to hire someone who has never worked before. They might be excellent, but there's no track record. That's why credit isn't really about debt. It's about demonstrating responsible behavior over time. And time is important. Very important. Because trust isn't built overnight. Neither is good credit. Now here's where things get interesting. Because your credit score affects much more than borrowing money. Part 2. Why this number has so much power. A lot of people think credit scores only matter when applying for a credit card. That's not true. In many countries, especially the United States, your credit history can affect multiple areas of life. Let's talk about housing. Imagine you're a landlord. You have 10 applicants. Who are you more likely to choose? Someone with a strong history of paying obligations? Or someone whose history suggests financial struggles? That's why credit often appears during rental applications. Now think about car loans. Let's say two people borrow the exact same amount. One has excellent credit. One has poor credit. The person with excellent credit may receive a much lower interest rate. That means lower monthly payments. And potentially thousands saved over time. The other person might pay significantly more. Not because they bought a different car, but because of their credit profile. This is where many people feel frustrated. Because bad credit can become expensive. And expensive mistakes can make recovery harder. But that's exactly why understanding credit matters. The earlier you learn how it works, the more options you create for yourself. And here's something that surprises many people. A credit score doesn't just affect borrowing. Sometimes it affects opportunities. Sometimes it affects convenience. Sometimes it affects peace of mind. When your financial profile is strong, certain doors open more easily. When it's weak, simple tasks can become stressful. That's why credit feels like it controls people's lives. Not because the number itself is magical, but because the number influences decisions made by other people. Banks, landlords, lenders, businesses. And those decisions can have real consequences. But here's the good news. Credit scores are not permanent. They change. And that's where the third part becomes important. Part 3, how to build a strong credit score. The biggest myth about credit repair is that you need some secret trick. You don't. Most credit improvement comes from boring consistency. And honestly, that's good news. Because consistency is something almost everyone can learn. Let's start with the biggest factor. Pay on time. This sounds simple. Because it is. Late payments can damage your credit. On-time payments help build it. Think of every payment as a vote. Every month you're telling the system, you can trust me. One vote won't change everything. But hundreds of votes over time create a reputation. That's how strong credit is built. Not through perfection. Through consistency. Keep debt manageable. A common mistake is maxing out available credit. Even if you're making payments. Imagine someone gives you a credit limit of $1,000. If you're constantly using $950 of it, that can make lenders nervous. Why? Because it looks like you're heavily dependent on borrowed money. Lower usage generally signals more financial flexibility. And financial flexibility often looks safer. Avoid financial panic decisions. Many credit problems start during stressful moments. Unexpected emergencies. Job loss. Medical expenses. Life happens. And sometimes people make decisions without understanding the long-term impact. That's why emergency savings matter. Even a small emergency fund can prevent situations that damage credit. Good credit and good savings often work together. One protects your future. The other protects your present. Be patient. This might be the hardest lesson. Credit improves slowly. People want dramatic transformations. But financial trust builds the same way personal trust builds. Gradually. A good month helps. A good year helps more. Several years of responsible behavior create real momentum. And that's why patience becomes a financial superpower. The emotional side of credit. Let's talk about something rarely discussed. The emotional side of credit. Many people feel shame about their credit history. They've missed payments, made mistakes, accumulated debt, gone through difficult periods. And they start seeing their credit score as a reflection of who they are. It isn't. A credit score is data. Nothing more. Life happens. People lose jobs. Businesses fail. Families face emergencies. Mistakes happen. The important thing is understanding that a bad score today doesn't guarantee a bad score forever. Financial situations change. People learn. Habits improve. Recovery happens. Some of the most financially successful people today once struggled with debt and poor credit. What changed? They learned how the system worked. And they started making different decisions consistently. That's where transformation begins. Not with perfection. With awareness. Main takeaway. So what is a credit score? It's a financial reputation. A prediction based on your past behavior. And why does it seem to control your life? Because it influences decisions that affect housing, borrowing, opportunities, and financial costs. But here's the most important thing to remember. Your credit score is not your identity. It's not your future. It's not your value as a human being. It's simply information. And information can change. Every payment. Every decision. Every month. Every year. You are constantly writing the next chapter of your financial story. And that's powerful. Because it means you're not stuck. If you found this video helpful, subscribe to the channel. We break down personal finance in a way that's simple, practical, and honest. No fake gurus. No unrealistic promises. Just real financial knowledge that can help you make better decisions. And let us know in the comments. What was the biggest thing you learned about credit scores today? Or what's one credit question you've always wanted answered? Thanks for watching. And we'll see you in the next video.